Hey everyone, super microcomputer stock is crashing nearly 20%. In this video, I'll go through why the stock price is crashing. I'll answer if this is a buying opportunity for super microcomputer stock investors and how you should think about the company going forward. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so let's start with the reason why the stock price is down. So super microcomputer this morning announced when it would be reporting its next quarterly earnings, but without giving preliminary results. In other words, without giving an overview, review of what's going to happen in the quarter. Some numbers to give investors some insight of what they're going to report in the next quarterly update. And that sent the stock price down because it didn't include that bit of information. So in 7 of the past 10 quarters, Supermicro has released preliminary results with the announcement of its quarterly earnings date. So this morning it didn't include it. And so investors took that to mean the quarterly update that's coming is not going to be good because it didn't include the information. So this is along with the skeptical view that when investors are looking at a company, the company will report the good news and it will try and minimize the bad news. When there are good things happening, the company's management will highlight it, they'll talk about it. But when there are bad things happening, they will try and hide it, they'll try and put it under the rug, they'll hide it in page 48 in their investor presentation, and they'll try to get investors not to pay attention to those bad items. But when something good is happening, they'll go around the world talking about it, giving interviews to every news station, every outlet that'll listen to them. That's why when a company like Supermicro, which 7 out of the past 10 quarters has given us preliminary results, and in this quarter they didn't give us the preliminary results, the market perceived that immediately as bad news. So that's what's happening here, and that's why the stock price is down so much on the back of that news. Now, it's important to remember that Supermicro stock price has already exploded in 2024. It was already expensive to begin with. Remember, the stock price had exploded, right? But on March 6th, I published this video on March 6th, telling investors that it was a good time to take profits in Supermicro stock. It was a good time to take profits on March 6th. At that time, the stock price was $1,100 and $1,124. That was a good time to take profits in Supermicro stock. So today, as of this recording, the stock price is at $756. So you would have saved yourself roughly $300 if that recommendation was followed to take profits. Earlier in the year, around January 15th, I recommended Supermicro stock as a buy. And then on on March 6th, I told investors to take profits. The stock was up too much, too quickly. The valuation was getting rich. And my reasoning for that was primarily valuation. I acknowledged that the company's performance was excellent. Sales were increasing by more than 100%. Profits were expanding, and it was a good time for the company. But the price reacted ahead of all of that and jumping way more than I felt was justified. And I shared with you this chart here where I showed Supermicro's forward price to earnings ratio, and it had gotten up here close to 40. And I showed you the history of Supermicro and its forward PE valuation. Rarely ever did it trade at a forward PE of over 12. In fact, it didn't before 2024. It never got above 12 in the last 5 years. But then in 2024, on the back of that soaring valuation, on the back of that soaring stock price, given that the company's benefiting from artificial intelligence, the valuation exploded. And I argued that, yes, of course, it deserved somewhat of a higher valuation because it's now a much better company because of how highly in demand artificial intelligence is and how supermicrocomputers' role in that industry benefits it, and it's going to benefit it for several years. But I said a valuation of more than 3 times where it usually was too much. That was too much of a premium. The company was not this much better off, right? And that's still the case now. That's still my thinking now. One of the reasons for this is while its revenue jumped, its profitability didn't jump by an equal amount. Management is having to offer better deals to get its sales to increase. Unlike Nvidia, which is experiencing soaring demand for its products, it's selling out at premium prices, and there's a waiting list for people to buy Nvidia's products. Supermicrocomputer management said that they're taking a different strategy. They're trying to get themselves in the doors with some of these companies, and they're offering introductory deals to get themselves in the door. And management said they're going for the land and expand strategy. They're trying to get in, and then once they're in with the company, they'll try and expand and offer them more and more of their products. So they're not selling their products at premium prices, and their clients are buying partly because they're getting good deals here. Supermicrocomputers' profit margin is nowhere near that of Nvidia. It's a fraction of that of Nvidia, and its cash flow from operations was negative in the most recent quarter. Now, the negative cash flow from operations, understandable when a company's rate of growth of revenue is so explosive because it needs to build up inventory to make those sales in the future. But that can partly explain why the stock price is coming down so much on the back of this kind of news. It was vulnerable to this kind of retracement because the valuation had been so stretched. It was pricing in perfection. It was pricing in all of those excellent prospects that supermicrocomputer investors were expecting over the next 4 to 8 quarters was already incorporated into the stock price. And so when a bit of information comes out that throws water on that fire, it brings the valuation down so much because you were already expecting so much from the company. And so the price is down nearly 20%. And so to answer the question, do I think this is a buying opportunity for supermicrocomputer investors? I would say no. I would say this makes the stock a lot more affordable. I would say this makes the stock a lot more reasonable in terms of valuation, but you can see it's still not back to its norms here. It's trading at a forward price to earnings of 24, and typically it trades at a forward price to earnings of below 12. So you're paying more than double the typical valuation of supermicrocomputer stock because you're paying for those excellent prospects already. It's already incorporated into this price. So I would say if you've waited this far, if you took my advice and took profits on supermicrocomputer stock on March 6th, I would say the most prudent thing to do here is wait for the company to report its earnings. When it does, digest that information and then make your decision then on whether or not supermicrocomputer stock is a buy. Right now, it's still trading at an expensive valuation. The lack of preliminary results here does indicate that perhaps the results are not as good as otherwise might be expected because of the reasoning I highlighted earlier. If the results were great, management usually comes out and tells you what the numbers are, and the absence of those preliminary results is a little bit concerning, to be sure. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.